Welcome to the NetSuite presentation on OneWorld for global organizations. Over the years, as our customers have grown in size and complexity, many have found the need to upgrade from standard NetSuite to our OneWorld offering. Using our Suite Success methodology in delivering leading practices, we have built a process that streamlines and simplifies the transition to OneWorld. NetSuite was built over the last 20 years by working with thousands of customers to develop a set of leading practices, which are delivered to you right out of the box. Available on day one. In 2007, NetSuite released our OneWorld product. NetSuite OneWorld truly was built to run a global organization that supports multiple legal entities, functional currencies, languages, tax reporting, and eliminations with full financial statement consolidation. Many global companies face the same set of challenges, the first of which is a lack of visibility into the operations of all subsidiaries and geographies. Without a real-time view into the key performance indicators, metrics, and financial reports for each subsidiary, it's difficult to make timely and accurate decisions. Next, most controllers are left with the burden of manually managing things like foreign currencies, intercompany eliminations, and consolidation via complex spreadsheets, leading to error-prone and inefficient operations, which prolongs the close period. The last common challenge, I'll note, is realized when companies look to grow or scale. Managing complex issues such as internal taxation and statutory or localized reporting in multiple languages can be a daunting task that often takes more time and costs more money than is typically budgeted for. However, NetSuite OneWorld alleviates the pain caused by these common challenges. With NetSuite's unified database, you can leverage real-time, continuously consolidated reporting into all areas of your business with the ability to drill down to all underlying transactions. With support for unlimited GL segments and a robust native reporting engine, NetSuite provides a 360 view into all subsidiaries, business units, warehouses, customers, vendors, products, and more, resulting in unmatched global visibility into your business. NetSuite comes out of the box ready to handle over 190 currencies. NetSuite has been deployed in over 160 countries, and we support over 90 bank payment formats. The system can be viewed in 20 different languages, and we support the tax calculation and reporting for over 100 countries. Additionally, NetSuite has built-in tools that complete key tasks more efficiently, such as revaluing open foreign currency balances and eliminating intercompany transactions during month end. This leads to a shortened period close and allows accounting organizations to refocus their time on more value-add initiatives. Finally, NetSuite includes the ability to manage international taxes and localized reporting, impact multiple accounting books or ledgers with a single transaction, and achieve compliance more efficiently than any other system, enabling you to scale with ease as you need it. I'm going to take on the role of a global controller to walk you through the power of the platform and illustrate how these concepts make my life a little bit easier. As a controller, it is imperative that I have real-time visibility into all areas of my business. This is the dashboard that was delivered to me on day one and includes all of the metrics that are important for me to analyze as I run my business. My dashboard is continuously consolidated, and right now I am viewing everything from the context of my parent company, which has a base currency of the US dollar. The subsidiary navigator depicts a view of my subsidiary hierarchy. I currently have a parent company and 3 children companies, US, UK, and Canada. The subsidiary navigator lets me quickly filter my view to reflect only a subset of my business. With a single click, my dashboard is updated to reflect only my UK operations, and everything is translated to the GBP in real time. When my company decided to expand to Europe, I was amazed at how quickly NetSuite enabled us to do so. At the most basic level, all my team needed to do was create a new subsidiary and define a few key things, such as the company name, where they fall in my legal structure, the country to define a tax nexus, and the base or functional currency, as well as their fiscal calendar. Once that was done, we could continue to use our existing chart of account structure along with our other GL segments, which really streamlined our reporting and unified our global operations. After creating the new company, we imported their historical trial balances, and I instantly could run full consolidated financials that included our newest entity. This is my top-level consolidated income statement. I can break this out to analyze it by any segment in my chart of account structure, for example, by subsidiary. Since I'm viewing this in the context of my parent company, the report is in USD. However, I can view this in the base currency of each subsidiary as well, and I never lose the ability to drill down to source transactions that make up each balance. So I viewed my income statement by subsidiary, consolidated into the US dollar, then changed the context to view my UK sub in its base currency of the pound sterling, and then drilled all the way to a vendor bill that was actually entered in euro. Let's chat about how NetSuite uses a few different exchange rate tables to automate how we manage foreign currency and help ensure that we are ASC 830 compliant. NetSuite saved my team time since it includes an automated exchange rate feed from multiple providers. We no longer have to manually look up and enter each exchange rate into the system, something that took one of my team members about a half an hour to do every day. These automatic feeds update this table, which is used to default exchange rates onto each transaction. I can always override the exchange rate if needed, but I rarely need to do that. Additionally, at the end of each month, NetSuite automatically calculates my consolidated exchange rates, which are used in my consolidated financials, all based on the transactions entered throughout the month. This is a step that is completed from my period close checklist. There are several steps included in my period close checklist that make our close cycle extremely efficient and allowed us to shorten our close by about 3 days. This specific checklist doesn't list absolutely everything that we do to close our books, but it does include the key steps to ensure we lock down and finalize our transaction entry for the month so that we can prepare our financials. I can choose to lock our periods by company and by accounting book. So if I wanted to lock everything except my US tax book, which requires a few more adjusting entries, I can do so. I found that we gained the most automation in 2 specific steps: revaluing our open foreign currency balances and eliminating our intercompany transactions. I'm ready to run this process, so let's go through it together. But before I do, I'd like to point out a couple of things. First, take note of the transaction that we drilled down to. It was entered into in the euro, but our base currency for the UK is the pound sterling. Since we will not pay this bill until next month, I need to revalue this transaction based on the spot rate from the last day of the month. The system will use this information to automatically create a revaluation transaction to account for my unrealized gain or loss, which will automatically reverse on the first day of the following month. This is the revaluation entry that was created with the click of a single button, and I have full visibility to drill down and understand exactly how this transaction was calculated. Additionally, I can see that this reverses the first day of next month. Once I create this entry, I typically like to review my reports to ensure that everything looks accurate. My unrealized gain-loss report acts as a great supporting document that always ties to my financials. Here is the vendor bill we just reviewed, which I can drill down to. I can also easily export this in case I need to send a copy to my auditors. Remember, our real-time, no-batch GL means this transaction is not only always included in our unrealized gain-loss report, but is also reflected in our income statement as well. After I refresh my income statement, my unrealized gain-loss is now included in the results, and I can drill down to the revaluation entry that we just created. Since the revaluation entry and the related reports are aligned with what I expected, I can close this task in my checklist so I can move on to the next step that I'd like to discuss, which is eliminating my intercompany transactions. This step was probably the single biggest cost saver related to my period close. Prior to NetSuite, we had a full-time employee whose job was to manage our consolidation and reporting. It was a very tedious process, and the only tool we had to do this in was Excel. Our process is much more efficient now. Before I run this, let's take a look at a few things that might help me explain how this works in NetSuite. This is an intercompany journal entry that my team entered to account for our monthly management fee between our parent company and the US entity. Now, this is a simple example, but rest assured that NetSuite's intercompany management is robust enough to handle whatever your intercompany needs might be. Whether that is an intercompany journal entry, an arm's length buy-sell transaction used to transfer inventory, or moving employee costs for time and expenses incurred on a project that crosses legal entity lines. No matter the type of motive for the intercompany transaction, NetSuite treats them all the same when it comes to the elimination. When I execute this process, NetSuite goes out and finds every single intercompany transaction for the month and automatically creates a couple of elimination entries that are posted to my elimination subsidiary. One entry for my balance sheet accounts and one for my P&L accounts. Once this is complete, I'm given a link to the elimination entries, which I typically use to drill in and review. As you can see here, I am given all of the information I need to fully understand how this entry was created, and I have the links to drill back to the underlying transactions picked up in the process. Until NetSuite, I've never had a system with this much visibility that links absolutely everything, making my job more efficient. Just as we saw our revaluation entry reflected in our financials in real time, my elimination entry is as well. Before I refresh, you'll notice the intercompany revenue and expense amounts as they were prior to the elimination. And now you can see the elimination entry is also included, resulting in consolidated financials that took minimal effort to achieve. NetSuite also came with several other reports that make managing this process simple, such as intercompany reconciliation, an elimination report, and a CTA audit report for when I need to explain my CTA balance to my auditors. In addition to efficiently completing key tasks in my period close, NetSuite also supports my business as we scale and are required to achieve international compliance. As soon as we brought our new UK company onto the platform, I was able to immediately take advantage of NetSuite's international taxation functionality. This is the actual tax form required from the UK, and each of these figures is a drillable link. Additionally, I'm able to submit my tax forms electronically directly within the system. We no longer have to run reports, export them, and complete a bunch of manual manipulation just to get them in the right format, just to turn around and file them manually. There is one more topic that I'd like to cover quickly that accelerated our ability to scale, all while maintaining compliance, and that is multi-book. Our multi-book functionality gave us the ability to set up several accounting books or ledgers. My company set up 5 separate accounting books to meet our reporting requirements. Our primary book represents our US GAAP financials. But we also set up separate ledgers for IFRS, tax, local currency, and one for statutory reporting. Multi-book was designed to automate several key use cases, which many businesses require. For example, the ability to have a single transaction impact the accounting book in the appropriate way based on accounting standards. A great example here is revenue recognition. US GAAP and IFRS have different rules related to how we can recognize revenue, and the system takes that into consideration when posting a single transaction into multiple books. Multi-book also solves the ability to report on a company in multiple base currencies. That is what our local currency book handles. For instance, if you have a subsidiary in Mexico, which was set up with the base currency of the US dollar, but you also need to run full financials and report as if the base currency was the Mexican peso, you can add a secondary accounting book to that company and define it with the base currency of the peso. Last, multi-book can be used to automate statutory accounting. Some countries have a mandated chart of accounts that you must use when reporting to the governing body. Multi-book includes an account mapping tool, enabling companies to display their financials using their corporate chart of account structure or a statutory chart of accounts. The real value behind multi-book is that users only have to enter a transaction once, and the system will automatically spit out the correct GL impact for each book based on the rules that are configured, meaning there's not additional work required by the team to get added benefit of reporting on each book independently. Now that you understand the key value points that NetSuite provided me, let's talk about what this means for you. First, NetSuite's unified data model will give you unmatched global visibility into all entities and in all geographies in which you operate. You will also realize increased automation to complete key tasks more efficiently, such as managing multiple currencies and eliminating intercompany transactions. This leads to more accurate and timely consolidated reporting and reduces your days to close. And last, NetSuite comes with the tools necessary to scale and achieve compliance, whether that means international expansion into new markets or automating the way that you manually operate today. Thank you very much for watching, and I look forward to hearing how NetSuite helps you achieve your company goals